Good evening, everybody. Tim Knight here, Slope of Hope, and wanted to talk a bit tonight of the theme of, from my point of view, this is sort of the Bears March. And let me explain what I mean by that. What we're looking at here is the S&P as it appeared uh, last March. And if you put yourself in the shoes or hooves of a bull, you can see how exasperating this market must have been. Because even as the market got cheaper and cheaper and a better and better bargain, in quotes, nothing seemed to work, nothing seemed to take. And even down here in November, during this sort of apparent climactic sell off, you can imagine in this area in December, looking forward to a new presidency, a new year, there's a lot of buying, and down it went. And the bulls surely were just going out of their minds because nothing was working. And so buying in March was an act of insanity because it had been proved for about 2 years that buying was a fool's game and that it was simply a route to losing money. And only the stupid ones were going to buy. And we know now that they were actually not stupid at all. They were quite smart to be bold enough to buy, even though looking at this chart back in March, there was no whole heck of a lot of difference between this sell-off and this sell-off. I mean, there's nothing about this chart that screams buy. There's no basing pattern. There's no huge capitulation. It's just a continuation of this erosion. But as we know now, people who bought back then, especially the really crummy stocks like the Pier 1s, did sensationally well. Now, the shoes on the other foot, the past 8 months have been for bears just to guarantee to lose money. Nothing works. Everything we do does wrong. And even like in this instance in early July when it looked like things were going to finally turn, it just got the rug pulled out from under our feet. So most of 2009 has been just a nightmare. And it would be foolish to be bearish, one would think. Now, I'll put in my usual kind of admonishment disclaimer here. I am probably better capitalized and have better risk management than most of my readers. It's not meant to be snarky or insulting at all. It's just a simple fact. Those trading aggressively with a small account on the short side run a risk of ruin with that account, surely. So when I speak and when I write, I mean, this is for myself. And I have been recently more at ease, more comfortable adding to my shorts than I have in an extremely long time. And it's because, in my view, this is sort of my march. This is my opportunity to get aggressive. And the past 6 or 7 days have been very good to the bulls, and it has been surprisingly undistressing for me in that time period. I was looking back to some old slope postings, kind of like at junctures, to see kind of what I was thinking. This is back in October 11 of 2007, and although I obviously didn't know it at the time, this was the top of the market. And I was just kind of woefully talking about some really nasty comments and emails that have been coming in. A guy wrote, and I really appreciate your updates of shorts. Now I know which stocks to buy now. Hehehe. And this other guy wrote, face it, you premier bears are fighting the Treasury, the Fed, every brokerage, every investment bank, every PE firm, every pension fund, the White House, CNBC, Kramer, petrodollars, commodity dollars, euros, Asians that have a vested interest in seeing the market continue up. Can you possibly be more tone deaf? You could utter these same words today, I think, on CNBC and be taken very credibly. You'd probably get an anchor job there. Same situation. And then another one. It seems you bears haven't learned anything. Well, that was the top. And I was interested to see what I was saying at the bottom. And this is on March 9. And I was actually apprehensive about talking about buying stuff, but I made a list of stocks I was buying. And it's kind of funny. Apple, $79. I mean, good Lord. Um, and, I've done enough of the beating Tim up shtick. I'm not going to go through it. I'd not hold on to these. And I missed the vast majority of the run up. So shame on me. I'm done with the apologies. So get over it. Um, but that was then and this is now. And as I look at, and I'll just punch in some tickers here of some indexes. Here, for example, is CZH, this is the China index. As I look at this struggling with a very apparent range bound right here, as I look at the mid cap dollar MID, and I see it beneath this very important retracement level, having broken this trend line and having approached that arc right there. These indexes, almost to a man, as it were, have such formidable overhead resistance that the notion of them just month after month continuing upward seems outlandish to me. Looking at dollar MSH, just chart after chart after chart that I see shows a one retracement toward very important resistance, and two, just an absolute struggle to move higher. I mean, yesterday the market was up over 200 points. Everybody was screaming about new bull market and so forth. Look at it didn't even best the highs of a couple of weeks ago. We're seeing a lot of that. Dollar OEX. And I don't mean this as an apology for the bears. I just, from my point of view, this to me may be seen in retrospect as just an incredible gift, because the Russell, which is that's really my focus now. I mean, I'm the Indu and the S&P. I really am not that watching that closely. It's the Russell that I'm, because a lot of my shorts are small caps and mid caps. And as I look at this, the fact that it has, one, come this far back, and two, in the past month or so, has had its own internal struggle. This is a much weaker index than like the Indu, which is at highs that it hasn't seen in a very long time. This is relatively weak, and that's why I'm so interested in this, because the fact is that if the market becomes weak, this will get really, really weak really fast. This is just waiting for the stilts to get taken out from under it. So again, months ago, I never dreamed we'd be back into the mid 600s on the Russell, but we did get up there. And for me, it's a fantastic shorting opportunity. And I can punch in any index here and it looks bearish to me. Here's the semiconductor index. Does this look like a bullish opportunity? Does this look like a market poised to push higher, having created a good solid base? I don't think it does. Let's look at the transports, which goes way back, so it's taking a little while to load here. I've got this set to all data on a daily basis, so some of these are like tens of thousands of data points. Here's the transports. As we zoom in, God in heaven, does this look like a bullish chart? I've been charting for a while, and in my opinion, the answer is no. Now, most people don't use charts. Those that do don't know how to use charts. And the public, in my opinion, has just no earthly idea what it's doing right now. And the interesting part for the bears is that what happened over the past week, that is reassuring the bulls that, hey, if the market does fall, as it did early this month, it'll just come back again. That's exactly the psychology we need. And I'm actually delighted that ethos is out there, because it's going to be tremendous aid to us in the near future. I'm nearing the magical 10-minute mark. Anyway, I'm feeling really good about things, indexes notwithstanding, and I'll see you tomorrow. Happy Veterans Day.